So good afternoon, good evening, wherever you are. Welcome to Financial Inclusion Week and this session on the role of fintechs and their challenges for innovating for low and moderate income people. A really important topic, and a topic that I think deserves perhaps more thought than it usually achieves. And I have a fantastic set of people to work with on this. And first of all, I'd like to introduce Snigdha. She's the program officer for Bangladesh at the portfolio for advancing financial inclusion, with a special focus on increasing women's access to financial products and services. She's a global development practitioner and researcher with over 12 years of experience in the USA. And she worked as senior gender and research consultant at the World Bank and co-authored a book entitled Voices to Choices, Bangladesh's Journey in Women's Economic Empowerment, which was published in 2019. Snigdha, welcome, and thank you so much for getting up at 4 o'clock in the morning to join us. We really appreciate it. That is beyond the call of duty.
Thank you, Graham. Thank you very much. And I'm delighted to be a part of a fantastic panel that Financial Inclusion Week has provided me with.
Thank you, Snigdha. Kevin is with us from Kenya. He serves as the chairman on the board of the Digital Lenders Association of Kenya. The members of the Digital Lenders Association lend more than $40 million to over 4 million customers a month. He's also been a part of a range of startups as a founding team member and has focused on providing financial service solutions for the mass market. His current startup, Oye, looks to provide financial safety nets to the continent's tens of millions of moto taxi riders, providing insurance and benefits backed by purchases that riders make every day. Kevin, Karibu, welcome. Dee is from Vietnam, and she's worked now for 8 years in the Vietnam ecosystem as a creator and facilitator of programs supporting entrepreneurs. She's the operations director at the fantastic Startup Vietnam Foundation, a not-for-profit development organization that works to promote innovation and empowerment of entrepreneurs in the Vietnam startup ecosystem. She's also the chairwoman of the organizing committee for TechFest, the National Innovative Contest. Welcome to you, Mandy.
Thank you, Graham, and happy to be here with everyone. And thank you for having me and have to share about this ecosystem from Vietnam.
Great. Thank you so much, Mandy. Sunny is the coordinator startup at Ministry of Communications and Informatics, Government of Indonesia. He's in charge of various startup programs from awareness to post-seed. And this includes the fantastic National 1000 Startup Studio of Indonesia. Previously head of e-business technology, he was involved in the Indonesian e-commerce roadmap. He holds a doctoral degree in technology management at the 10 November Institute of Technology. Sunny, it's really good to have you with us.
Thank you for having me and have the opportunity to share about what happened in Indonesia.
Yeah, really excited. So, as I said, we have a stellar panel and we got some really interesting issues for them to discuss. But let's briefly take a look at the fintech over the last little while. The first half of 2021 saw fintech investments rising to 98 billion, with nearly 2,500 deals signed. as some of the economies saw post-COVID recovery. Emerging markets were ground zero for all this excitement. Across Asia and Africa, we've seen a surge in fintech providers offering access to multiple financial products, savings, insurance, lending, e-wallets, and with the emergence of super apps. The convenience and offering of these super apps, such as Gojek, Kakao, Grab, Paytm, and so on, have led their popularity to a growing proportion of the population. But the current fintech very little for the poor. Fintechs have a clear blue ocean opportunity to cater for this segment. However, challenges remain. Lack of adequate infrastructure, limited efforts to build customized products or understand the behaviors and aspirations of this segment, and of course the need for profits as a startup, limit entrepreneurs from entering this market on the other side of the digital divide. And our session today will cover some of the key questions with our experts. Let's start by looking at some of the issues with Snigdha. Snigdha, in Bangladesh, the current ecosystem is valued at 1.45 billion. It is believed to reach 10 billion. Now, financial inclusion in the country has increased from 16% in 2011 to 37% in 2018. But despite this remarkable progress, Bangladesh remains one of the economies with largest unbanked population. Now, together, all fintechs put a process of about 4 million transactions every month. I'll rephrase that. Process about $4 billion worth of monthly transactions. This progress has largely been led by banks launching their platforms with large adoptions of e-wallets. Offerings such as bKash, Nagad, Islamic Wallet, mCash popular amongst customers, but the ecosystem remains nascent. Snigdha, in your experience, what are the challenges unique to the fintech ecosystem development in Bangladesh?
Thank you, Graham. That was an apt overview of what Bangladesh has been experiencing. And we know that there's been a steady rise in digital financial services in Bangladesh, especially in the last year during the pandemic. And yet, the financial exclusion remains quite high, especially the gender divide.
Yeah.
If you ask me about the key challenges of the, fintech ecosystem, I would say it's a set of complex, some of the complex processes or lack of it, so to speak. But I will highlight maybe a couple of the issues that I think are the more prominent among the others, like the lack of access and lack of financial awareness, and of course the gender divide. And these three are not disconnected. These are all in a way connected. And I'll say how. The lack of access, so to speak, as we know that in a country like Bangladesh, there's a huge number of population who live in the rural and the semi-urban areas, right? And given the situation, there has been some policy initiatives like the eKYC, which is the electronic KYC system, simply to streamline, simply to make it much less complicated for people who maybe live outside of the stronger infrastructure, the financial infrastructure, so that they can be onboarded easily. While these systems cut off processing times, really lessen the number of steps that one client needs to fill up to get a bank account. And of course, the time, the steps, and the complicacy is lessened, but it is a digital process. So it requires some familiarity with the digital system, or at least some basic understanding. Given the low to zero level literacy level, let alone digital literacy level in Bangladesh, there are some challenges even with these very convenient user-friendly process that the policymakers and the regulators combinedly has introduced. At the same time, there on the other side of the supply side, I would say that there's some system glitches. There's network issues, there are biometric verification issues. So coming from the demand side of the clients and coupled with some system glitches from the supply side by the providers, the uptake could have been faster. And of course, we have to give it some time for a new system to be in place and then get kind of, convenient for all the users. So this lack of access, while there's attempts, while there's initiatives and increase in infrastructure, we will see some time lag between the initiation and then the proper uptake, when we will see some decrease in the number of financial exclusion, so to speak. This is one part. And then
great. I think, sorry, go ahead.
Sure. Sorry, have I kind of eaten up my time?
No. You have at least a minute more.
Okay, great. And then the lack of financial awareness in general among the public is another obstacle that we kind of have to address. And this is separate from just general literacy. It's financial literacy, understanding how to kind of maximize consumer protection. Simple basic things like not to share passwords, not to just use one phone for all the family members in the household to do digital transactions. This is kind of part of the problem, which is inhibiting people from just adapting the newly available system that's been coming from the policy side. But since I don't have time, I'll come back to it later. The gender divide. This is such a complex issue which cuts across the lack of literacy, lack of access, lack of financial understanding, the prominence of social and gender norms that again discourage women in just going ahead and getting the full advantage of the financial system. But I'll leave some time for you to have any clarifying questions that you may have.
No, that's really great, Snigdha, and you tapped on a couple of issues that are really dear to my heart. I think financial capability is hugely underestimated, but even more so is digital capability. Here we are rolling out the digital revolution, and there's a very substantial proportion of people, particularly women, who either don't own a phone or are not comfortable doing anything much more than making calls with that phone. We as a sector underestimate that, and it is complicated to address, no question, but I worry that we tend to underestimate it. So I'm really glad you came to gender, and I hope you'll come back to it again when we come to you for the second question. Thank you so much, Snigdha.
Thanks.
So now, Kevin, Mandy first, apologies. Mandy, over the past couple of years, the Vietnamese fintech sector has seen a major surge. We've seen a big jump in payment gateways with players like Momo and Payo and Mocha and so on. But also an increase in lending and in even blockchain. Now, Startup Vietnam Foundation has been supporting fintechs and startups for many years now, providing a variety of support to a variety of agtechs and fintechs and insurtechs and skilltechs and so on. But in Vietnam, only 30% of people have bank accounts, according to Fintechs. Of the population using digital payments. So could you talk a little bit about what you observe with your startups in the foundation, and whether they are try moderate income customers?
Yeah, thank you, Braham. And so as for Vietnam, I think we do see similar problems like what the Bangladesh and also other developing economies encounter. And as you can see, the whole pandemic have actually hit us hard for the last 2 years, especially this year, which is when over 4 or 5 months of social lockdown, especially in Ho Chi Minh City. And as you can see, this is the whole pandemic, I think, is a global thing. But for Vietnam, we see it bring to the surface on kind of, like facts and features linked to the challenge. And especially for the gap between, like the lower and mid incomes and those who's more like wealthy influencers. So for the startup, I believe that before they wear the hat of a startup founder, they are the citizen themselves, and they actually experience, the whole pandemic at its core, especially for Ho Chi Minh City and Hanoi. These are the two hubs of startup, and Ho Chi Minh City got the worst out of it. So many of the founders actually got to experience the whole, total lockdown, inconvenience in, like on kind of social services. And we know how it is to actually, like be depend on the digitals, on the phone, on every, like all of the digital device to actually make the connections with others. So I guess that give the founder, the entrepreneurs, the lessons and the insights that they will need to, express doing their business. So that's the whole challenge and opportunities. At the same time, it brings people closer. No longer, like tech in another side and life in another side is now actually the real case. And I have seen, like you said, many big names in the fintech industry start to now reach out to solve problems in disruptions, logistic, e-commerce. We are a cash economy. People so used to, like go to the small market right next to your neighbor and then just buy everything by cash. But now you can no longer do that. And then actually you need to use a lot of other like chat or super app and everything forcefully. You need to use it, and it's actually speed up the whole digital transformation journey for everybody, not just for like some sectors like before. Now everybody need to use that, and so we see the players try to have closing the gap between the farmer and the citizen. How do we actually order food from other province without now the whole logistic and the value chains locked down? And we also see many like telecommunications company also reach out, say, hey, I actually have the ability to reach out to every single citizen. How do I actually utilize that and make the life easier for people now that they need to depend on like the phone? Vietnam, we have a large populations. We also blessed with great coverage for internet, the Wi-Fi's, and so inexpensive. It's very easy to get a smartphone, and also to get 5Gs, 4Gs for that at a very affordable price. So I guess all of the has add up to the advantage for the startup, so that they can utilize that whole infrastructure advantage, less than new insight about what people actually need now. And so I guess that will bring to the ecosystem as well, to the economy, many new services and products. now insurtech also is now on the verge of, like booming. I guess people now realize that the insurance is not just about health, but also, like emergency issues like just covered hospital fees, or like for businesses, they also look at the fact that business can be easily affected by the whole VUCA world like this. So how do they actually cover the risk? And so I guess that's the whole new market for fintech, not just fintech, insurtech, but also for all of the tech-based entrepreneurs. And so
Great.
definitely low and middle income. Vietnam have a large population still living in the rural area. So they're the big market as well.
No, thank you for that really good overview, Mandy. And it reminds me, we did quite a lot of research in this in countries across Asia and Africa. COVID both crippled some startups, but also turbocharged others. Those that were able to respond and move to a more tech-driven approach and build the right use case actually did remarkably well out of this week. And it's interesting to hear that is the same in Vietnam. So Kevin, you're back, and that's great. And I wanted to ask you a little bit about what's going on in Kenya. Obviously, growth in fintechs, particularly in Kenya and Nigeria. And Kenya's made remarkable progress on financial inclusion in the last decade through the mobile money revolution. And that has expanded access to and use of financial digital credit products such as M-Shwari, Fusilisa, KCB M-Pesa, and other MNO facilitated bank products are already popular in the market, and digital loans in recent years, but so has the share of non-performing loans amongst these. And also the vast majority of those borrowers are young urban males. What does Kenya's digital credit sector need to do to address new, particularly rural women?
Okay. First of all, thank you. I'm sorry about my connection issue. I've solved it. Graham, thanks for the question. Before I jump into what should we do for rural women, I'll sort of explain what are some of the overarching challenges in the ecosystem, and then move into how solving those problems will also solve problems for the rural women as well, right?
Great.
So you rightfully said it. Kenya has seen a substantial amount of growth in the digital credit, digital lending ecosystem. We have a product that you mentioned called Fuliza that's lending up to $10 million on average a day. And that's usually used as working capital by informal traders, informal sector entrepreneurs, what we call mama mbogas, which basically means vegetable vendor, but it's usually a lady. And then the other big demographic is what we call the boda boda, which is the motor taxi. I think Mandy in Vietnam would know what that looks like, because she has many of those in her country. We just have as many. So those would be sort of the key segments that we are lending to in the informal sector. Now, what do they use the money for? That's where the data gets surprising. It's a combination of personal and business use. When it comes to business use, it's everything from small capex investments that will help them do business better, to plugging a shortfall in cash flow, to actually using it as working capital. In the boda boda ecosystem, for example, fuel is not something they would purchase with their own money. They would use one of the financial products in the market to fund their fuel for the week or for the day. and figure out how to pay it back with the taxi rides they do. The other big use of the funds is sudden health issues or family health issues. That's a really big segment. And then the final is usually to fund some form of school fees, either for themselves or for their children or for somebody in the wider ecosystem. Now, when you speak to women, you can see how the woman's role in our society, and most societies, would be integral to ensuring that, you know, children are going to school, healthcare expenses are paid for, and then, of course, income being earned. Currently, I wouldn't say we're doing a great job in reaching out to the rural women. And the main reason is because our market has evolved so well, for lack of a better word, there are real opportunities that haven't been taken care of yet in the urban centers, for example. We still haven't given, for example, a loan in the sort of specifically digital lending. So where you come digital first, you do your KYC scoring and disbursement on a digital platform. In Kenya, we are yet to disburse a loan above $1,000. So that tells you that, you know, before, as we are innovating in our market, there's so many niches and bunches of demographics that we have to solve for first, and a lower hanging fruit. And so there isn't a real incentive yet to go into the rural women to solve for because of the commercial viability element, and also because they're competing commercially viable lending models that have not yet been solved for. And that's how that ties in. Now, the other big challenge we have, as you noted, it's a lot of young people taking these digital loans, is we have certain systemic issues that also need to be solved for before we get to those rural women. I'll just speak about two. So the first one is financial literacy. We haven't done enough yet in the urban centers, and I think we also need to solve for that before we get to the rural centers, but it would be better if we did both at the same time. And when I talk about financial literacy, it's about, you know, what is money, from that very basic storeholder value, exchange of value mentality to, you know, what's an interest rate and how do you sort of manage your cash flow. My experience has taught me that people understand expenses and profit, particularly in the lower segments, because they understand that very real need for cash. But it's sort of making them understand the differences in pricing, how to sort of plan a little bit better, etc. And then, of course, the second big issue is over-indebtedness. Because of that sort of super fast maturation of our industry, what you've seen is because our credit reference bureau mechanism, or the credit information sharing mechanism, wasn't moving as quickly as we, the innovators, were, it doesn't solve for some of those challenges that could be solved by a CRB, a credit reference bureau. So we've got real issues of indebtedness. In my business, one of the things we realized is, you know, under 25-year-olds were literally, you know, taking these loans and not using the funds for what they were meant to do. And we had to shut down lending to under 25s. The justification obviously is partly moral, but also it's commercial, right? So, and then now we focus on the over 25s, build that out. And then at some point, you know, when you have the cash flow, the funding, you now move back to try and solve how do we lend to that sort of younger market in a more sustainable way. I hope I've answered your question.
Yes, and again, a very good overview of some of the issues in Kenya. You almost referred to it, but didn't quite, which is the problem. Inappropriate borrowing, and what I mean by that is borrowing, particularly for sports betting, which I think is horribly prevalent and is going to be a challenge for all digital lending across the globe. And I think that that's something that we need as an industry to be very aware of. And I know they're working on that in Kenya, and I'm sure that your association is at the forefront of doing so. But it is, I think, and we need to be careful about it. Paksani, first of all, thank you so much again for joining us. And it's great to have you with us because of the exciting things that are underway in Indonesia. You've seen such a major growth in digital startups in the last couple of years. So between 2018 and 2020, Indonesian fintechs attracted funding over $849 million. And you've got major sector, particularly in the payments and lending space, with insurance slowly gearing up. And obviously you've got super apps, for example, GoCheck, and also Grab there as well. But again, half of Indonesians remain without a bank. About 10 to 15% of low and moderate income people are taking credit or saving with a financial institution. And again, as we've heard from other countries, a lot of the digital innovations still largely cater to urban populations, and in Indonesia it appears to be geographically concentrated on Java itself. You've seen a lot of progress and a lot of startups over the last few years. What changes do both the established platforms and also those younger startups face when trying to cater to the mass market, especially in regions outside Java?
Okay, thank you, Graham. That's a very good question. Probably I'll start with a pandemic is like a fire, burning, and also brightening at the same time. That's for probably a lot of industries slowing down because of pandemic, but also a lot of, especially digital, is all accelerate. In Indonesia, internet traffic is spikes starting in 2020. Started from pandemic is spikes 15 to 20%, and especially move to residential area, and this COVID-19 speed up our digital transformation probably by average 5 to 6 years. That's the challenges in Indonesia is the first is infrastructure. The infrastructure is not only because we are a island country, right? Because the challenges is from the big island we have to build a submarine cable, and then we already built the national core. This is a Palaparing. It's probably the from submarine cable and into the municipal and to all the city. It already connected with the backbone of the internet in Indonesia. It's connected 514 cities and municipal in Indonesia, and then we have middle mile network. We also have a satellite because it's an island country. We need satellite for the small island, and then we are built more than 10,000 BTS on east of Indonesia. And then the first problem is infrastructure is already built, but not all is connected, because the engine is for the digital economy is internet, right? And then the second, digital literacy in Indonesia. After we connected, what are you doing with your connectivity? Probably in fintech, the problem is digital literacy. We are moving faster, more than the financial literacy. The digital literacy is faster than the financial literacy. That's why about the lending platform, the lending apps is a problem in Indonesia right now because of the illegal apps, and then the easiness to lend money, because we're having no problem with the digital literacy, because in Indonesia, if you build something in Indonesia, it will went viral, because in Indonesia right now we have having the bonus demography from last year. We have young productive age more than 70% of our Indonesian people is on productive age, and we are going to enjoy the demographic bonus until 2030. That's the engine for the digital transformation in Indonesia. The first is digital infrastructure, and then the digital literacy, and that's why we in Indonesia, the one that saving our economy is also the startups, because when we are locked down, we can still sell the product, sell the food, or sell through e-commerce, through Gojek, and the restaurant is cannot take dine in, but we can order food from Gojek. That makes our economy more resilient. In that the interesting thing, when the economy is slow down during the pandemic, Indonesian just announced 3 new unicorn during the pandemic. That's how resilient our digital economy in Indonesia. We are having 3 new unicorn in 1.5 years during the pandemic, and then the 2 is Fintech. Zendit is a payment gateway, and then the second is Ajaib, is the investment apps. That's a 3, and then the third one is logistic apps. That because I think the pandemic is also give a lot of opportunity for the startup to accelerate, but also help the Indonesian government to be more resilient in and more faster in recovery of the economy. Thank you, Graham.
Great. Well, thank you so much, Pasani, and a really good strategic overview. Perhaps what we would expect from a ministry, and it's extraordinary that Indonesia has made the pandemic, and congratulations to all of you involved. So we're going to round 2 of questions. I'm going to encourage the panel to treat this as speed dating. I will whiz through them as quickly as we can, so that we can have those of you kind enough to be our audience. So this time I want to focus a little bit more on understanding how the digital divide might be addressed, and what the role of fintechs in uplifting the poor might be, because inclusive would require these fintechs to reach segments, but the barriers that you've talked to, whether it's infrastructure, regulatory channels, digital capability, or even actually the financial behavior of this segment, challenges us, I think. So Snigdha has shown a lot of progress. The government's push for digital inclusion. Internet penetration has grown from 1% to 60% in the past 12 years. And the cost of internet access is now just 1% of what it was in 2008. The e-commerce sector has expanded and further accelerated during the pandemic. And it seems to me, amidst all of this excitement and disruption technology, the world-famous microfinance institutions like BRAC and Grameen and Asa and Buru still have an important role to play. what role do you see technology playing in the evolution of financial services for the poor and particularly for women in Bangladesh?
Thank you, Graham, for providing the opportunity to again focus on women and the gender divide that we see in financial inclusion in Bangladesh. And kind of borrowing Pausani's metaphor of the pandemic as the fire, I'll just cite an example that we have seen in Bangladesh during the pandemic. It's the fire which is burning things and at the same time lightening up some aspects. For example, in 2020, when the government mandated that two payments, one is the wages of the garment workers be paid digitally, and also the social safety net cash transfers be paid digitally to the most vulnerable groups of population in Bangladesh. That was especially extremely timely and beneficial because during the first wave of the pandemic, lots of garment workers just left the urban areas and went to their village homes. There was no other way, if there was not a digital infrastructure in place, to really, send them their wages digitally from the factory owners or the accounts to their mobile wallets. And similarly for the G2P or the social safety net payments, they really rely on this cash from the government. These two examples show us what technology can do in terms of including the unbanked, underbanked, and marginalized people in Bangladesh. However, I would like to emphasize on one issue. This technology also has to be inclusive. It's not only financial inclusion per se, but just the approach, the implementation, the regulation of using technology as the platform should be inclusive at the same time. And there, we do see some, again, initiatives from the policymakers and the private sectors as well. For example, the IDTP, the Interoperable Digital Transaction Platform, that is going to be in operation fully by most likely the end of this year. Again, not only increase the convenience of the consumers, of course, including the poor, it will also promote healthy competition, which may, again, provide some business viable, less transaction fee or other costs associated with digital financial systems. And
Great.
Nothing can be done without the help of technology.
Yeah, no, and you make a really good point here. One of the reasons that we at MSC are so committed to helping governments roll out G2P programs for the vulnerable sector is because it's the most direct route to getting people on board onto digital platforms. And I think that the very fact that governments are channeling money through digital routes to the very vulnerable, unique opportunity to bring them into the financial inclusion and digital financial inclusion fold. So thank you for that, Snigdha. Really appreciate it. Mandy, again, quick as you can, simply because I'd love to get to some audience questions. Currently, we see growth of financial services in Vietnam often embedded on larger platforms. So this won't just increase the reach of those financial services by multiplying use cases, but also will allow analysis of customer data from different apps in order to provide tailored financial products. How do you see embedded finance shaping up in Vietnam, and what are its benefits for those low and moderate income customers that I think are so important?
From the reviews sharing from other panelists, we have seen that the problem of like credit info sharing, how do we actually have a synchronized system, and so how do we actually encourage people to not just do like the financial inclusion, so digital inclusion. The less platform that they need to use, easier it is for them to get access to services and products. So I, from my point of view, understand that the embedded finance and how one of the large, like larger platform from not just e-commerce but also other, and we see now government and so see the problem of financing ads streamlined to the citizen directly have so many problems. How do we actually use digitals to solve this? How do we actually identify who's the one that need and qualify for financial aid? Those are actually the challenge that we see, and we see that embedded finance can definitely help with that. More and more, older generations got to access to these, but to my father's or grandparents, just let them use the app is a huge problem. So how do we actually just make a synchronized system so that they can get access to a one-stop shop for all the services and products, especially for social service? That what I see as, the benefit of if we encourage more embedded finance. And also for situations like the pandemic, we see that many of the kind of like small unofficial businesses need, like financial aid to support with the cash flow. And this is where, the whole credit issues come to the surface, because they have trouble to actually kind of like prove to the bank that they are a beneficial potential business to get the loans. So this is also the challenge and opportunities for super app to actually come into play and say, oh, you have worked on my platform as a vendor for so long. So I understand that you have how many transactions per week, how many per month, and then this is where I can give you credit and the loan for that. So both for business, personal issues with financial aid, I think that's how we can, solve the problem with embedded finance.
Great. Okay, thank you. Just one observation, of course, which is that only a limited number or proportion populations, and typically not the low and moderate income populations, have access to smartphones. And of course, they are necessary to access these apps. So I'm always worried about that, because even low-end smartphones have so many issues in terms of battery life, thick thumb syndrome, and so on, that I think that the sort of statement that, oh, everyone will have a smartphone in the next 5 years is actually very optimistic, shall we say politely. Kevin, back to you, if we may, and talk briefly about fintechs. As they develop the multiple tools and products and low-cost solutions to support financial inclusion, they still don't, in the main, segments. Now, you're a founder of several fintech startups. What advice would you give to other startups to expand their reach beyond the easy-to-reach affluent customers? Or would you just tell them to focus on the customers because that's where the profits are?
No, actually, my ethos, my personal ethos is, and mantra is, where I'm trying to be part of the, that group of Africans that will ensure we're the most modern place on earth by 2050. And so every fintech I have founded has always had a purpose behind it. So I'll speak about what we've done with OE and then give advice. So Oye is basically a tool that, you know, and Mandy spoke about super apps. We aspire to be a super app, but the way we started is by dealing with apathy about insurance. So every time a motor taxi rider fuels at our partner petrol station, we've already negotiated a margin with our partner petrol station that will fund a premium that will give them free insurance. So they'll pay the pump price, right? Whatever it is, but they will get insurance for the day. And if they fuel a certain amount of liters by a certain time in the month, it covers the whole month. And the idea is we're giving them hospital cash, right? So that if there's an accident, they can go to the hospital and not have to take money out of their pocket to pay for hospital bills. Now, that seems like a very easy to sell product if you asked the motor taxi rider to pay. But because we have less than 2% insurance penetration in our market, and even less in that particular demographic, your real competition is apathy. And so my advice is, if you really want to, and as you said, make a significant impact in our society, particularly in emerging markets like Kenya, you really have to go to the ground and solve a problem that, you know, afflicts many people. And if you are able to demonstrate to a core demographic that, you know, this financial solution could help you mitigate risks, or could help you expand your business, or could help you, you know, do whatever, but positive, you then now start seeing real return even on capital, right? Because there's always a positive, when you're positively impacting society, the money doesn't come immediately, but it follows quite soon thereafter. And, you know, for every fintech entrepreneur, founder that's watching this, a good example again from Kenya is M-Pesa. M-Pesa in reality solved a problem for money transfer in the beginning for people like me who live in the urban center but needs to send money to my grandmother in the rural setting. And it solved a very important need that, you know, sort of helped that very core demographic. And then fast forward 10 years later, it's become the payment rail for the ecosystem. So you have to start. So my advice to fintech founders: identify the problem statement that has the most impact to that bottom of the pyramid demographic. Ensure you're solving it in the right way, and once it clicks, everything else will fall into place.
Great summary. Thank you so much, Kevin. That's really good. And yeah, M-Pesa was actually piggybacking off an activity that Kenyans were doing anyway to transfer that money, which was they used to send the scratch card number to their grandmother, then sell that scratch card number to someone who needed it in the village. And M-Pesa just made that system a huge amount more efficient. Pasani, last question, and then we'll go to the audience, I hope, inshallah. So digital economy has been growing, as we said, and the government of Indonesia has been actively supporting and enabling ecosystem for digital innovations. Programs like your 1000 Startup Digital, as well as OJK's Infinity Center, of that. In the rapidly growing digital economy in Indonesia, where do you see the role of regulators and policymakers to support these digital startups and help bridge the digital divide for underserved and unserved population segments?
Thank you, Graham, for the question. Probably the biggest part of digital transformation is changing the way we think. And then clearly the thing that transforming is not the technology, but it's technology that transforming us or the people is transforming by the technology. We are working more than we are collaborate with the startup more than 10 years to make sure the safety on online shopping, just to move the mindset from the brick and mortar shopping to the online, because in Indonesia it's very difficult to convince the user that is safe. Is probably in e-commerce spending a lot of money on commercial, on onboarding the user is more than 10 years we're doing together with the startup in Indonesia. And then the role of the government is probably in our ministry is less regulate, more on facilitate and accelerate on the startup side. We are working together with the startups, make them more agile, make them more dynamic to solve the problems of the citizen of Indonesia, especially in the rural area. That's why we have less regulate and more focus on facilitate and accelerate. That's from the startup side. From the user side, we have a digital literacy program that every year we aiming to literate more than 12 million citizen how to use the technology. We started with 4 pillars of the digital literacy. The first one is digital skill, and then the second is digital culture, and then digital ethics, and then the last one is digital safety. This is the 4 pillar when we are you are entering the digital world. And then we from the sector itself, such as digital financial literacy is also important, because you can digitally literate, but if you cannot use the apps without the financial literacy, is probably making more problems in the future, such as Indonesia probably right now is concerning about data breach. The lending process is very easy, but if the consumer cannot pay, probably they will spread all the personal information, and then they are probably using illegal ways to take payment back to the lender. That's what's happened in Indonesia. Probably this will be complete policy from the startup side and then the consumer side in Indonesia.
Great, thank you so much. Yeah, that's really helpful. So we have literally hopefully a couple of audience questions, and then I want to go around and thank you all. So Snigdha, one very much directed to you. How did the government of Bangladesh ensure that women had a mobile phone or a digital account to receive their payments?
So mobile phone penetration is very high in Bangladesh, also in rural Bangladesh. So the government did not ensure that the women have a phone per se, because it was assumed that they do have, and also because the social structure in rural Bangladesh is pretty community-based. Even if the woman, the beneficiary, female beneficiary did not have a phone, it was very, very, very likely that either any other member of the household or even a phone that she could use to receive the money was available. So that actually did not create a problem whether a particular female had a phone or not. And there's a second part of the question, but I'm not sure whether I have time.
Yeah, big question, but I will, if you can answer it very quickly, that would be amazing. How did the role of women change in the household in terms of decision making on the use of the money that was sent?
So one of our partners, BSR, who has been working with female garment workers to receive their wages digitally, has a study done where it's shown that instead of cash, when women receive their wages in their accounts digitally, it increases their decision-making and bargaining power within the household. It also induces some savings because they do not immediately cash out the whole of the salary. They leave some amount in the account. Over time, it accrues to an amount of savings, which is pretty beneficial for them.
Great, great. I mean, there's such a big wealth of literature on decision-making and the influence of financial services on it, from Naila Kabir and many others.
Absolutely.
I'm always fascinated by this discussion. Anyway, we are at time. I want to thank you all enormously, particularly Snigdha, who is burning the midnight oil, or specifically the 5 a.m. oil. So much all for joining us, and I would like you to leave us with one word of wisdom in 30 seconds, and we'll go in reverse order. So Pasoni, one word of wisdom for everyone to take home. Unmuted, ideally.
I'm sorry. The internet will connect all of us with the rest of the world. And this will open a lot of opportunities. Are we ready to embrace them?
Super. Thank you, Pasan. Wisdom from Kenya.
For me, it's nature favors collaborators. And so if we work together to solve some of these big problems, we'll definitely get it done.
Yes, Anna. Mandy, one word of wisdom.
Diversity and inclusions is not about the methodologies, but how we actually be empathy with people, and then see our expertise and insight. How do I actually solve all the problems and be happy together?
Splendid. Thank you so much. And Snigdha, a 5 a.m. word of wisdom.
The 5 a.m. word of wisdom would be to have a pro-poor, gender-inclusive approach and start by identifying the problems from the demand side, then bridge it from the supply side.
I am 200% behind that one in particular, but all great words of wisdom. And thank you so much. And thank you for those of the audience who joined us. And with that, good morning to Snigdha. Good afternoon to all the rest of you. And thank you so much for your time. Bye-bye now.
Thank you.